Good morning. I am Cesar Delgado from back roads of Illinois with Mike Zulolo from Hatch, Kansas. Good morning. Mike, how are you for this morning?
Very well, Caesar. Great to be with you today. We're having another exciting day in the markets for the grains, it looks like.
Could you explain to the audience about the commodity prices for this morning in Chicago?
Yes, I'd be happy to. We continue to see more information as more infrastructure in the Black Sea, grain-related infrastructure, storage facilities, terminals in key ports of Ukraine and in Crimea are seeing increased fighting, increased missile and drone strikes. The trade is, I think, in the market starting to price in more the acknowledgement that they have lost the grain deal in terms of the grain initiative between Ukraine and Russia. Worse than that is that Russia has clearly gone on the offensive, going after specific grain ports such as Odessa and Chenorsk in the southern parts of the country. These are essentially the crown jewels of the Black Sea for grain transportation out of Ukraine. And now the market is struggling with this more offensive mindset by Russia, and also struggling with the idea that we'll see more grain have to move west, out, north and west out of Ukraine through rail, through rivers, yet the Eastern European countries such as Romania and Poland have already said that they do not want any more of the Ukrainian grain because it's depressing prices for their country and their producers domestically. So we are adding some premium. It is mostly in the corn at this stage, and I think that is mostly because of the issues with the Ukrainians' shipments were mainly corn. Almost 50% during the Black Sea Initiative were corn exports. And also, just as importantly, was the issue of a high ridge of pressure starting to come into a key area of the Western Corn Belt, essentially right over Iowa, is what the models are suggesting. And with temperatures increasing heading into next week, we could see Des Moines, Iowa break 100 degrees a week from today if these models are correct.
Are you kidding?
No, this is a situation where the market, after the grain stocks report at the end of June, had kind of put away the idea that we would have a 2012 type market, 2012 type yields. And that was because the USDA gave us a different report than we were expecting in some ways, but mostly because the rains came just in the nick of time to prevent, roughly in my estimation, 70 to 75% of the US Corn Belt east of the Mississippi River from having a 2012 type drought scenario with their crop yields, with corn and soybean yields. However, this latest weather update and this change in the pattern shifting this high over the Western Corn Belt opens the door that we could have a substantial amount of the upper Midwest and the northern Great Lakes suffer and potentially suffer in a similar manner as 2012. It would really probably open up the door also, says Caesar, that last year's yields of around 49 bushels in the soybeans nationally and 173 bushels nationally in the corn, those would be difficult to get to if this high establishes itself.
I will ask you about July's WASP report from last week. Could you tell us about it?
Yes, I think that the WASDE report, especially when it came to the U.S. yields, and this kind of dovetails with what we were just talking about. The WASDE report was unfinished in terms of U.S. yield projections. We did not see a lower soybean yield. I think that can be expected now in August. We saw some reduction in the corn yield in the July WASDE. We may see another reduction depending on this high pressure ridge. I think the wheat is probably the biggest issue, both domestically and globally. I was surprised the USDA raised the all wheat yield, given that the hard red wheat belt and Kansas especially, which Kansas, if you don't know it, is still producing about 20 to 25% of all the wheat production in the United States, if you include all classes. And with us being in this state roughly 30 to 40% behind where we should be versus last year, I was surprised USDA went ahead and raised the yield because of the lack of data and the lack of harvest progress. Similarly, the world stocks numbers went down pretty dramatically. USDA raised the demand, the total usage for the world, and they cut the total production for the world to the tune of almost 6.8 or a little over 6.8 million tons. That tightened up the stocks to use ratios in the wheat pretty substantially. And I think that may come in and play a role later in this month. And as we get into August, as we see what's happening with Ukraine and Russia, USDA is probably going to have to make some changes in their export forecasts for Ukraine, especially now that the grain deal has expired.
How is the corn and beans in Kansas and Nebraska?
That's a really good question because I'll start with Nebraska. It's a little easier to answer. We have had some problems, big problems in Nebraska, focused in central and southern and eastern Nebraska. So, almost half the state was dealing with some very problematic weather up until about 2, 3 weeks ago, right around that June 30th crop report. Since then, some of my clients in that part of the country have received about 7 and 8 inches of rain. And so, in that respect, they have really found some supportive production potential again. I would say that the Nebraska state corn and bean averages are going to be down in yield, but not down as much. And about 20 to 25% of the state is still looking at some difficult issues right now. But that number was probably well over 60% 3 weeks ago. Kansas is much harder to define. We here in Northeast Kansas against the Missouri River and the Missouri border are finding very good crops. In my opinion, the crops I've seen so far are probably the best since I've lived here for the last 10 years, having moved from west central Indiana to Atchison, Kansas. You go about 50 miles west of here, though, and the crops deteriorate pretty quickly. And I would say about 50 miles inside the Missouri, you drive east, the crops deteriorate pretty quickly as well. Missouri is one of the lowest states right now, if not the lowest major corn growing state, with only 30% of the corn in good to excellent condition. That compares to 55% last year, and last year was a very rough year for the state of Missouri. So Missouri and Iowa are still showing up very much on the corn conditions projections for good to excellent, and that high pressure ridge could really determine a lot here in the next couple of weeks as far as how fast that crop may go down in both those states.
Because of the drought since 2020.
Yes, that's right. And the global drought, especially, we're starting to see an El Nino take effect in the world, and the market is starting to gain more traction in terms of price action with that. And that's probably due to the problems already here in this country and Europe that have been, as you say, going on for about 3 years.
How is in the livestock market for our four-legged friends?
The four-legged friends are having a round of prices this last 30 to 45 days. I am a little bit nervous, though, if the feed grain prices start to escalate rapidly, that they won't come down as fast as they did back after the June 30th crop report, Caesar. So I'm nervous that the feed side of the equation needs to be locked up at this point, especially if we do have a high ridge of pressure establish itself over Iowa. I think it's going to be very difficult with tight old crop supplies of both corn and beans, and to a lesser degree, wheat. I think this is an issue where the feed prices could remain elevated, especially in the cash markets and cash basis levels, especially in areas around the high pressure ridge, could see some pretty dramatic moves. That's probably the biggest issue that I have to contend with my clients and subscribers as a whole, is talking to the livestock clients about making their profit, kind of locking that profit in and making sure that that doesn't get eroded by a market that rallies and really never comes back down.
Finally, what is your opinion for a couple of months for crop conditions include Western Corn Belt?
The Western Corn Belt, if this ridge of pressure sets up, will probably see some of those ring of fire showers. And so the Western Corn Belt, I would define as Texas, Oklahoma, Kansas, and Nebraska. The upper Midwest Corn Belt of the Dakotas, southern part of Minnesota, and most of Iowa, I would define as the most problematic and the ones that could lose most of their yields. I would also say that in the next couple weeks, in fact, just a week from tomorrow, next Thursday, we will get the new Federal Reserve policy. The trade has, in my opinion, clearly made a move towards suggesting that they will not raise rates after this month. The trade is pricing that in currently, and I think that's why the dollar is at a 14-month low or near a 14-month low on the index. I think that's a very dangerous thing to assume at this point, given some of the recent economic data. So next week at this time, I may be getting some hedges in place for the corn and the soybeans and maybe even the wheat, even if the ridge of high pressure is still in place, and getting some puts bought, some paper positions in place in case the Federal Reserve policy does come back in and hurt the commodity prices in the short term.
Thanks, Mike. Is there anything would you like to go to tell the audience on the crop conditions in Kansas?
No, I would say just thanks again, Caesar, for having me. It's been a pleasure to be with you today. I'm so glad you reached out. And if anyone would like to see more of our information, go to globalcomresearch.com. It's globalcom with two M's, research.com. And you can sign up for a 2-week free trial there. You can also see our product services and what we offer. And, please remember there is substantial risk of loss in trading futures and options. And past performance is not indicative of future results. And thank you again.
Thanks again for your time and business. This is Mike Zulo from Kansas. You've been listening to Back Roads of Illinois. I am Cesar Delgado. Have a fantastic day. Thanks.
You too, Caesar. Take care. I'll talk to you soon.
Here's Stu Ellis with his report.
Hello again, everyone. This is Stu Ellis, swinging open the farm gate for you once again today. And the Mississippi River is our topic because it is really creating headlines almost no matter what time of year it is. River levels have gone from too high for shipping in the spring to too low for shipping this summer. Mike Steenhook, who's executive director of the Soy Transportation Coalition, says river levels have given shippers a whiplash since last fall. He said at that time we had historically low water levels on the Mississippi, and all of a sudden the pendulum swung quite profoundly to high water levels this late April and early May. And that was largely attributed to significant amount of snowfall in the upper Midwest in the late winter and the early spring. So that resulted in a quite high elevated water level in a very short period and closed the river for a period of time because to barge transportation. He said even with the higher water levels this spring, Steenhook was rather vocal about the threat to low levels returning to the Mississippi, given the fact that most of the farm ground in the Midwest and the plains still considerably dry. Even with that snowfall we had, was very little of what got absorbed into the ground because the ground is still very cold at that time of year. It wouldn't require that profound of a dry period to suddenly return us back to low water conditions on the inland waterway system. And that, he says, is unfortunately what has happened. And so he says we're seeing water levels back considerably lower when you compare it to last year, which was a very low water year, a very dry year. Some stretches along the Mississippi are even lower than they were last year. Steenhook says it'll be a challenge to get those river levels recharged. At various spots along the Mississippi, we're either lower than we were at the time of last year or comparable to where we were last year. So that doesn't portend as well as we look into the future during the time when we need to be transporting a lot of corn and soybeans downriver and a lot of other commodities upriver. A lot of that can happen between now and then in the fall. But one of the things that's just continually a reminder to all of us is that you can have rain that occurs, but so much of it is absorbed into the ground when you have such dry conditions. The Mississippi continues to fall and will be near critical low water stage within a week at the Ohio-Mississippi River confluence. And that's the prediction of Anna Wolverton. Anna is the decision support meteorologist for the Mississippi Valley Division of the Army Corps of Engineers. And she says we're moving to the driest time of the year and the daily average river stages fall from here through October. She said it's likely that the river will rebound to near normal levels, at least then. The weather patterns in summer usually consist of hit or miss storms, and that type of rainfall just will not be enough to raise the river very long. He says it may bring brief increases in the river level, but it's not a good source of hope. All the folks on the coast don't want hurricanes. The folks in the Midwest pray for them at this time of year because that could be the only widespread rainfall they get in the summer and early fall. Sorry for the gloomy outlook this week, but the Midwest does need rain. Now those water levels on the Mississippi and Ohio falling for this second straight year, according to Bloomberg News. That means it's really getting to be national headlines. In Cairo, where the Ohio joins the Mississippi, levels have dropped more than 6 feet in the last week, forecast to fall more than 4 feet more by the end of this month, and pushing the Ohio River into its so-called low stage, when barges can't run aground and shipping lanes are forced to narrow. And that's the same case on the Mississippi. And above average rainfall and fast falling snow led to a little bit of a rise, but that certainly did not hold. That's a look at our farm gate blog for you today. I'm Stu Ellis.
Yeah. For your morning commentary, you've been listening to Back Roads of Illinois. I am Cesar Delgado. Have a great weekend.